SHHA, driving the senior housing and healthcare sector forward.
Good afternoon, everybody, if you're in Europe, and good morning to everybody if you're in North America. Thanks very much for joining us here for the SHHA in-depth webinar series. And this is the first of a series that we're going to be running at the Senior Housing and Healthcare Association, looking at some of the in-depth topics, sharing insights. Super panel coming up here. But first of all, I just wanted to introduce Sylvia Zimaka of the SHHA. But a really interesting session today, Sylvia.
Yes, it's our pleasure to host for the first time our new series, SHA In-Depth, where we're gonna discover more colors of our very bright and future-proofed asset class. But I think there will be the best person who will introduce the concept and a little bit also about Senior Housing and Healthcare Association is, of course, Ron van Blois, who is not with us today because he's at COP in Dubai, but he prepared a little introduction to let you know more about what is our concept.
Founded in 2020, the SHA is the leading industry alliance driving the maturity of the senior housing and healthcare market as a response actually to a growing demand, changing consumer behavior of older adults, and also rising healthcare spending across geographic markets. We are powered by purpose-driven parties in the spectrum of operators, investors, developers, advisory and technology companies, and in collaboration with fellows in the field of listed companies, co-living, and country-specific operators. We are running successful events at the biggest real estate fairs, publishing our reports during the year, sharing thought leadership on socials, and hosting our annual summit. And as of today, we are launching a new series of online events called SHA In-Depth, designed to provide and share research on areas such as social impact, user-centered design, alongside geographical thought leadership on markets, strategies, and regulations, as well as best practices and operational models. The first online event will be focused on inspirations overseas, specifically the US market, and sessions on integrated retirement communities, Nordics, Germany, and impact of technology will follow soon. So in-depth events will deepen your knowledge, create surprising crossovers, and inspire professionals with thought leadership. So really looking forward to meet you at our SHA in-depth sessions.
And of course, very much senior housing and healthcare part of that impact discussion. And so very important here that we have Ron. They're joining us in Dubai, so great that he could be with us and sharing that message with us. Super panel coming up. So we have Elizabeth White, who's the founder at NUUage Coliving. We have Jennifer Dixon, founder and CEO of JD Solutions Group from the US, and of course Caryn Donahue, head of senior housing transactions, healthcare and senior living at Savills. So let's just hand over to Caryn just for a kind of brief introductory presentation, and then we're going to have views also from Elizabeth and Jennifer, and then we can pick that up in an interactive discussion. And feel free also to share your thoughts, your questions, and we'll try to address those as we go along. But for now, over to you, Caryn.
Thanks, Richard. Hi, everyone. As Richard said, I'm Caryn Donahue. I lead our senior living and healthcare business at Savills. I'm going to do a brief kind of whistle-stop tour, a few slides to go through kind of what is senior housing, what is the sector we're actually covering here, and then also to talk about the kind of demographic story, how it compares between Europe and the US, as well as a discussion around the kind of investment market between the two markets as well. So what is senior housing? I think to kind of set the scene, everyone uses different naming conventions for what senior housing is. Having been in the UK, covering the UK and European markets for the last 5 years, I previously also worked in the US, so kind of know the comparison between the two. So I guess how I would outline the sector is really in kind of two buckets. The unregistered settings and the registered settings is the easiest way to do it because everyone talks about it in different ways. So the naming conventions that we call kind of in the under the window of senior housing. I've used the kind of UK and US naming conventions here, but how I guess I would think about it is starting from left to right, the left side being lower care, lower acuity, and as you kind of move to the right, increasing in acuity. So your unregistered settings being your retirement housing or integrated retirement communities, as we would call them in the UK, also known as active adult and independent living in the US, where you very much have a real estate setting with kind of third-party services, domiciliary care brought in, and then the registered side of the sector, which is really your care homes and nursing homes. However, in the US, you also have to have licensure or registration to operate assisted living and dementia care, as well as skilled nursing facilities. So these really fall in that kind of registered bucket. So I guess senior housing covers all of those buckets, but from left to right, it would be more real estate, hospitality services, and care as you kind of move from the left to the right side. So just setting the scene as to what we're referring to today. Looking at the demographics, I don't think this will be a surprise to kind of anyone tuning in, but led by the US, the growth in the elderly population continues to drive demand in the sector across the US and Europe. You can see that the US leads the way in terms of the expected growth in population of the elderly over the next, let's call it 2 decades. And we're looking at Europe, Ireland, Norway, and Poland are the leading markets in terms of the kind of 80 plus demographic. Interestingly, Poland, in terms of total population, is actually expected to decline. And you can see that their elderly population is very much expected to grow during that period of time. So interestingly, will be an interesting market from the broader sector perspective. And the deficit of supply continues to widen across most countries as demand drastically outpaces supply. As you can see here, Austria, Germany, Italy, and the Netherlands are really the only countries where the number of beds in long-term care facilities outpace the actual population aged over 65. All the other markets are at a deficit as we see that kind of baby boomer generation coming through and the supply of units not being able to keep pace with that. When you look at the investment market, it won't be a surprise that the larger and mature US market leads the way in investment volumes. However, European investment has grown significantly in this space over the last decade. If you compare the kind of 2 peaks in investment volumes in the US in 2015 and 2021, in 2015, for example, there was about 20 billion of investment into senior and nursing homes in the US and only about 2.5 billion in the UK and Europe. So this makes up roughly about 12%. If you look at 2021, where again, investment volumes were at a peak in the US of around 20 billion, the UK and European markets made up about 9.5 billion, which is just under 50%. So you can see that that proportion has materially grown over the last, let's call it 6 or 7 years. In 2022 and 2023, we've seen that proportion even grow more to about 60%. However, that could be skewed by the kind of macro backdrop that we're currently facing in investment volumes more generally. When you hone in on European investment specifically in the sector, it's led by a few countries, with some having more mature markets than others. When you look at the kind of unregistered side of the sector, the UK and France have definitely dominated that market across Europe, with the Netherlands being a kind of close second. When you look at the care home sector, Germany is known to be the kind of most mature in this space. So unsurprisingly, the German and the UK market have really led in investment volumes in care homes, with again, the Netherlands being kind of a close third. Over the last 5 years, investment into the sector in the UK and Europe has largely been dominated by domestic European investors, but you can see that US investors have focused on senior living when looking at the kind of pan-European context versus care homes. And that may be driven by the fact that the registered settings are a bit more complicated across Europe, given the various regulations in various countries. But U.S. investors have definitely prioritized the kind of lower acuity side of the spectrum over the last 5 years as that market grows. Looking ahead, we did an investor survey as Savills, and in the next 3 years, investors unsurprisingly aim to increase their allocations to the living sectors. This is kind of a broader trend that we're seeing, with about 2/5 of those saying that they're targeting senior living and about a quarter targeting care homes. So there's definitely a desire for increased investment into these sectors as they continue to mature across Europe. And looking at the kind of quantum of that, a third of investors plan to invest between 100 and 500 million into senior living and care homes over the next 3 years, with most looking at it on a pan-European strategy, so not necessarily focused on individual markets. So you can see that there's a definite pent-up demand for investment in the sector, which is part of the kind of discussion that we're talking about here today, is how do we compare that to more mature markets like the US to make sure that investment can then kind of come through going forward. So I think from here, we're planning to have kind of more of an open dialogue across the group. So I'll pass it back to you, Sylvia, if that's okay. And then we can kind of start from there. If there's any questions, please do let me know.
Caryn, thanks for this introduction. I think it shows where we are heading, and I think it's quite obvious that the demographic changes will make the asset class growing. But of course, I think today focus will be the senior living, because I think that this is maybe this part of the asset class which is a little bit easier to tackle. But I think to understand properly what is senior living, we have to start with one very important thing about actually discussing what is the target of audience of this kind of the products. Because I can share you my experiences that whenever I start talking about senior housing, we have in our heads probably maybe the generations of our own grandparents. And I remember you, Elizabeth, saying that, once you were giving a speech during our Brussels summit, you said, I'm not my grandmother. Jennifer, you also shared one of the articles in our SHHA report, and you actually tackled exactly the same issue that, this upcoming generation of seniors, yes, older adults, maybe has completely different needs. So I would like to start with this, actually. What are the needs? How can we define this new target audience that we are actually trying to design this new senior living for tomorrow? Elizabeth, Jennifer, up to you.
Ooh. Well, that's a big question. So I'll jump in first there. And I think that, it's amazing to see just the changes that have taken place, I think, especially in the United States, in terms of what senior living looked like, my gosh, 17 years ago when I first started in the industry to right now. So we've had such a shift, and this new generation, I mean, my goodness. So by the year 2030, the baby boomers are going to be turning 65. That's almost 71 million people in the United States. So I think when we look at what do people need and what do people want, there's a lot of questions that people are asking. Number one, the question is affordability across the board. Is this something, and will there be options for everybody who wants choice? And I think choice is something that is equally as important. Wellness, overall well-being, living a life of purpose. So I think we're really seeing the shift that, people don't want to think of retirement as the end. And it most certainly shouldn't be. So we're really seeing with, the change in the demographics and the shift, this real demand for choice, for options, and to continue to lead a purposeful life the way that we want to. So, I'm gonna bounce over to Elizabeth now, because I know she has some specific thoughts on this as well. But those are some thoughts to get us started.
So when I think about what I call the economics of aging, I go back to 1935 when Social Security was first enacted, and life expectancy at birth then was 70. And the median retirement age was 65. So you basically had 5 years you had to put together. Today, if you make it to 60 in reasonably good health, you can live 25 years. And when you at the same time look at what the median retirement savings, what that is, then you see that there are lots of Americans who have not set aside the sort of $2 million that you would need to maintain your standard of living all that time. So unlike before, where you were retired for just a few years, people are now looking at a third of their life where they will possibly not be working when they need to work. So this model that we have had, I heard someone describe it as, Bible study, bingo, and bowling, which you see at when I would go to, where my grandmother's friends were. There's a very different sort of feeling of people wanting to be engaged, many more people who will be working well into their 60s, people living fitter, longer lives, changes the kinds of needs that we have for senior housing.
Okay, great. I think it's a very brief introduction. I think we'll be a little bit coming back to this because I think that with the, let's say, socio-demographical aspect of it, we have a little bit different aspects like affordability and inclusivity, which are very much in line with what we are discussing, but maybe we'll come back to this later. But maybe coming back a little bit to the investment perspective. I mean, an open question for all of you. I mean, of course, Caryn started talking about also this investment potential. But I'm wondering, because even if we look at the portfolio of the members of SHHA, they have changed over the time, where historically, like 20 years ago or even 5 years ago, majority of the portfolio of the operators or the investors in this asset class were nursing homes. Yeah, so very much on the care side. Now we can see that much more is on the senior living. So do you think that actually this part of the asset class is attracting more investors? Is it maybe the way to attract actually the new investor to this asset class? And why, if you have this observation?
I'm happy to start on that point, Sylvia, if that helps. I mean, I think there's definitely been a shift towards a kind of lower acuity setting, not necessarily the nursing home market, but I guess we saw the evolution in the US the exact same way, where you saw a shift more into kind of an assisted living product or an independent and assisted living product come through. Whereas historically, I think, especially across the UK and Europe, really nursing homes have been the only option for older people. So they could either live at home and bring in domiciliary care into their home, or they could move into a nursing home when they maybe didn't need that level of care. And I think as we're starting to see the evolution of this new kind of independent or assisted living product, just like we saw in the US, there's definitely been a large drive from an investor base. I think across the UK and Europe, the largest barriers are scale and also quality of operators. We just don't have the same size of market or evolution of market as we do in the US, where there's lots of different opportunities with various operators. But we're seeing that, and I think, as I kind of pointed out in my presentation, that there's definitely a shift of investment towards the kind of lower acuity settings, not necessarily fully registered nursing homes in certain markets, but not all of those have fully evolved just yet. So I think that's kind of, we're in the middle of that shift, I guess I would say.
And Jennifer, how do you see it from your perspective?
Yes, I think, one of the best examples that we can see of this, in the US right now is the emergence and growth of the active adult sector, which is really showing that, again, there is this demand for choices other than a senior living setting. And I really think that's what active adult and what investors and operators are trying to do. I know, with parents my parents are in their late 60s, early 70s, they don't want to live in senior living. That word senior living doesn't resonate with them. So we are definitely seeing this push or this demand for additional options where this is not need driven. This is want driven and lifestyle driven versus, wow, I'm 88, 89 years old. I can no longer take care of my house or myself. I have to make a choice. So that real distinction. And so we're really seeing these new asset classes and these new options coming available at this point that I think is reflective of what people want and are asking for. And of course, with that comes greater scalability, greater affordability, and a different type of operating platform compared to care homes or assisted living or memory care.
But from the investment perspective, is this product actually closer to the residential market? You also, Caryn, you mentioned also hospitality market, because, several times we use the word operator, yes, but of course the operator that is necessary to handle the nursing home or care home, which is really a professional company that has know-how exactly. And this is completely something different that we need in the assisted living. That is also impacting another factor, which is very important for investor. I think the reputational risk is much slower, because on the senior living part, there is much more on you as an investor than maybe when you take a look at the nursing homes.
Yeah, I mean, I think that's definitely true. I think it probably skews closer to residential. And I think when you look at residential investors that are probably getting priced out in a lot of ways, especially looking at the kind of multifamily market, where they might not be able to compete from a price standpoint there. This is seen as a kind of quasi-residential product, the independent living side of things, and at a material discount to where residential is trading, because it's viewed as a riskier asset class, especially across the UK and Europe, where it still isn't very evolved. So I think, yes, it is easier for investors that have invested across the living spectrum, so that be student or residential, to get comfortable around a more, as Jennifer was saying, active adult or independent living setting, because it is much more real estate and light touch services model. However, because they're worried about that kind of reputational risk of the registered setting. So that definitely has been a shift. It's just getting them comfortable around even the kind of operational risk that also still exists in the independent living world too.
I think it's really interesting that change, and I'd be interested just to pick up on actually, when did that shift begin to happen? Was there a point in the US? I mean, we can see it beginning to shift here in Europe for certain, but I mean, I guess, how far are we behind what was happening in the US? When did that start to happen? And you're obviously seeing another shift now in terms of that idea around more active living rather than even senior living. So it'd be interesting to see, how that's developed and what sort of time frame we've been looking at, really. I don't know if you want to pick up with that first, Jennifer, and then it'd be interesting to hear from you, Elizabeth, as well.
Yes, definitely. I mean, of course, there's been significant shifts when we look at pre-pandemic to post-pandemic in the United States. And that we've most certainly seen a significant shift there. But I also think that when you look at, looking at some statistics here. So if you look at assisted living, which is more of, like a care home setting as we're describing it, the average age right now of a resident in assisted living is 84 to 88 years old. And 71%, almost 3/4 of the people who live in assisted living are women. And almost 3/4 of the people who live in assisted living have some type of memory impairment. So I think that, what is also driving the shift is, as Elizabeth mentioned earlier, people are living longer than ever before. And we've seen this change where maybe 15 years ago, the average age of a resident in assisted living looked different than it does today. So I think we see all of those shifts impacting that. And I think last point that I would make that we can talk a little bit more about later is the impact of consumer perception and the ability of us to be able to really educate the general public on what the options are in your life when it comes to aging. And that in itself is a big discussion that I think is really fueling it as well.
It'd be good to pick up your perspective, I think, Elizabeth, here.
Yeah, so one of the things I want to mention is, we say seniors. It's really, not one group. So someone in their early 60s is very different and has very different needs than somebody in their early to mid 80s. The other thing that has happened with this economics of aging is what has been described as this forgotten middle. You have in the US millions of Americans who are earn too much for any kind of government assistance, but cannot afford market rate senior housing. And so there's a big gap there in terms of affordable senior housing that is not being addressed.
And here we smoothly get to the point, the topic that is also very important, which is affordability. So I know that you have your view, Elizabeth, on affordability, also because actually from your perspective, your investments and your company, you look also at co-living, so not like senior living in general, but co-living, which is also a very interesting concept and very in line with this issue of affordability. So if you could bring us a little bit more about that.
So I've written a lot about the retirement income crisis and the millions of middle-class Americans who are not going to have enough to maintain their standard of living. When you ask people, how do they want to live? Most people will say that they want to age at home. When you look at the US housing stock, what you see is that only 4% has the kind of age-friendly features that would allow people to live safely and comfortably at home. When you look at the household demographics, when I was growing up, 43% of households in the US were nuclear families. So 2 adults and children, a couple of children under 18. That number now is 20%. The largest household group in the US are older adults aging alone. The housing stock, though, 60% of it has 3 or more bedrooms. So we've got all of these things that are sort of out of skew with these changing demographics. So I started to look at, you see a lot of co-living spaces for millennials, but I didn't see anything for older adults. We have, as we also know, an isolation crisis that is happening. We have an affordability issue that is happening. And I started to think, could we, with shared housing, where people would have their sort of independent spaces, private quarters that they could live in, but also sharing in community, could that be a way forward to get some of the economies of scale that are needed to get the affordability and to address the loneliness and isolation issue that we read so much about?
I think the affordability one is a really interesting point. And Caryn, it might be interesting just to get from you, your perspective. How does that fit into the investment side? Obviously, there's a lot of focus on affordability across the residential piece as well.
Yeah, I mean, I think the affordability element is a constant question from any incoming investor into the space. So I think you have the same issues. I'm not sure it's been solved in the US, even as a more mature market, to find, as I think Jennifer and Elizabeth are both saying, is that there still isn't necessarily an affordable product. And I think the majority of, say, the UK market has been very much focused on the kind of higher end luxury side of things. And there hasn't necessarily been this shift or ability to shift towards an affordable product. So I think it is something that is a constant question mark, is understanding how are people going to fund their retirement. If they are buying into a scheme, if they are renting, how will they be able to fund that? And I think it will remain a question mark, and it hasn't been solved here in a maturing market, because the majority of schemes that have been built to date have been focused around the kind of higher end nature. We have seen a shift specifically in the UK towards a more some operators focusing on what's called shared ownership, where you can kind of buy part of an apartment and pay a part rental piece, and that actually opens up the door to maybe a slight, or helps with that kind of affordability challenge. But I think it's a really difficult question that hasn't necessarily been solved in the US, which is probably 15, 20 years ahead of where we are in the UK and Europe, but is still remaining a problem or question of how we're going to solve for that across the UK and Europe as well.
No, I think that's interesting. And Jennifer, maybe just picking up from your side as well.
Yes, absolutely. So I think that even if we just take a look at the here and now, right now, or within the next 5 years, I know we're talking a lot about what's going to happen in the next 7, 10, 15, 20 years. But if we were just to look at right now, I think that, one of the big lessons that we've learned, and something that we're trying to do a better job of, is for those who can afford active adult, independent living, assisted living, memory care, the big question is why should they afford it? And I think that we have to do, and anybody who is considering being in this space or operating in this space or investing in this space, needs to have a really clear understanding that we're at such a unique intersection of real estate, healthcare, hospitality, and wellness. It is a very unique space. So when it comes to how we market that, how we talk about that, how we educate families, healthcare systems, the greater community around us, we still have, and in the US, I think we've done a lot of great things, but we've got a long way to go in helping people understand what it is, like specifically, what is it? So I've worked in this space for almost 20 years. My grandmother's 95 years old. She still does not quite understand the difference between skilled nursing and independent living, because, she has certain perceptions of it. So we really have to do a better job of educating and explaining. And if you're looking at, being in this space, it's a huge factor.
And how can we drive affordability a little bit more? I mean, is this down to regulation? Is it about creating the right type of product, speaking to, planners, to cities, to say, okay, well, we need to be able to create more affordable product here. I mean, we can see that there's a big challenge there, but does anybody see solutions coming through? Silence, so I guess not. Elizabeth, what's your take on it? There must be ways of being able to help drive and support the affordability side.
I mean, I think right now it's really driven by, subsidies and tax incentives, which there are not enough of. And I'm really wondering when the public will start to actually demand more. I think right now, when people feel that they can't afford this housing, they think that they've done something wrong, that it's actually their fault. And so there's a bit of embarrassment and shame around it. So there isn't the pressure yet, I think, on our legislators to really start to think more creatively and deeply about this as an issue. When I am speaking to groups, we won't have to read about this in, the New York Times. Right now, if you are 50 or older, you already know someone who used to be doing okay and is now financially challenged. And or who, when you look out the trajectory of what's happening to them, that they are going to, have a very rough time when they get into their 60s. So, in a culture that looks at and values being, rugged individual, and it's all, on you, I think that prevents the kind of assistance from government that could be really critical here.
Yeah, I think that's a really interesting point, and I'm wondering as well. There's obviously there's a growing and has been growing over the last 2 years focus on ESG here in Europe, especially, and particularly social impact strategies as well. Far more of a focus from investors on that topic. Do you see this, Caryn, maybe as driving that a little bit more? And I'd be interested to hear what the view from the US is, is that an active driver? We've obviously seen, regulation and incentives put in place for decarbonisation in the US. And I wonder whether there'll be similar things for social impact as well. But Caryn, I suppose, what are you seeing? And you're able to see differences as well between the US and Europe. So it'd be interesting to get your perspective on that.
Yeah, so I mean, I think it's definitely been a priority for European investors specifically, is that the ESG has been very much in focus. I think when you talk to US investors, it's less of a focus point. I think when you look at the European investment market, many are looking at ways to look at their fund mandates and think of ways to kind of future-proof their real estate, both from an environmental perspective, but also how do we get into kind of the social impact element, which I think a lot of people view senior housing as kind of ticking that box in a lot of ways. I think again, the US investor base is probably more of a tick box than something that is necessarily strategic at this stage. And it is definitely being seen from a European context and more important to investors. And we've seen that through the way that they've looked at, again, kind of their strategically looking at their mandates and how they're going to look at their funds going forward. I think it's definitely top of the list in terms of topics across European investors, and it's very important to them. But I think it would be interesting to hear from the kind of US perspective where that stands, because my understanding from speaking to a lot of the US investors is it's not as high on the priority list as we see it here.
Jennifer, Elizabeth, any views on that?
Yeah.
Sure. That's quite an interesting topic, isn't it? ESG in itself has become, a buzzword, an acronym for better or for worse. I think, we typically see it demonstrated more in actions rather than more like broad statements of support. So I think that when you look at the United States and you go state by state, looking at the friendliness to ESG and supporting those initiatives could be pretty wide ranging depending on what state in the US you're sitting in. But again, I mean, really coming back to I think that the demographic shift and what people are demanding and what people are wanting, of course, that is something I think that is coming up and is a question. So.
And, longevity, I believe, is right up there with climate change as a grand challenge. It is going to affect every aspect from, we see it in labor markets, we see it in housing markets, we see it transportation, health, whatever sector you want to name. And I think that we are in the US sort of behind the ball in thinking not just sort of 2-3 years out, but 50 years out. And what this will mean with a population that is going to be a much larger proportion is going to be older than ever before. I don't think we're doing this sort of strategic thinking that is needed given that challenge.
And I think, oh,
go ahead, Jennifer. Go ahead, Jennifer, please.
I think that the emergence of, not the emergence, but the harnessing perhaps of data is something that is helpful here. So that way, I think it's, and I think this is something a lot of people are aware of. ESG is not a feeling, right? It can be quantified in data, in outcomes, in business performance, in profitability, in all of those things. And I think that what we are seeing in the United States is a real push for transparency and clarity on what that data is, what are we measuring, and what are the outcomes of it. So I think that that's something that, you know, the theme of data is something that is all throughout the industry right now. And how do we use it? And how do we use it to do better and to be better and really make our operations even more efficient?
Because we can't track what we don't measure.
Right.
No, absolutely. There's an interesting question.
Although,
no, go ahead, Sylvia.
Although it's true that, I mean, for sure we have a lot of these discussions, but I believe that there are more questions than answers, is how to measure social impact. Because whenever we have our SHHA sessions, we always emphasize, of course, the fact that our asset class ticks all the three boxes, and the social impact in this one is especially visible, yes, but at the end of the day, then we have a question how to measure social impact, because even on the environmental side, there are much more indicators how to approach this topic, whether, you know, we all agree that, of course, ESG is about non-financial impact, but at the end of the day, without proper measurements, it's a question mark how to move it forward.
No, interesting. I just want to pick this up from Greta. Thanks very much, Greta, for putting a question in the chat here, saying there's no discussion about seniors outliving their money, and that has a huge impact not only on operating budgets but care budgets. So interesting topic that, I guess, and that picks in a little bit in terms of that affordability side. How do we deal that? Is that a challenge? Is that something for the operators? How do we see that? Does anybody want to pick that point up?
I'll jump in first. I mean,
Yeah.
from the side of senior living and, you know, working within and side by side in communities and sitting with prospective families, it is very much a conversation when families or individuals come to a community about, is this going to be the right fit for them? So that financial discussion, how families have financially prepared, is something that any responsible operator should be talking about with their prospective families. I can't tell you how many times I've had to sit with families and say, you know, really based on this, your assets are going to run out, you know, within 16 months. This isn't you know, the most responsible or the best way to be able to do this. But Greta's question is a huge one. And it's one that everybody, all of us, are wondering in terms of, as the gap between the costs of living longer and the costs of healthcare continue to grow, and what we have in our savings. So it's a huge question.
Yeah, no, I think that's... Yeah, go ahead, Sylvia. Sorry.
I think that's a little bit also maybe related to the models that we can incorporate. Yes, because I think in one of the discussions we were also thinking about whether it's, you know, the type of asset that you buy, or maybe the rental models. And I think Caryn, also once you also mentioned this in the lessons learned from the US market. Yes, that we should actually think about incorporating more the rental models. And maybe if we could talk about this a little bit, because I think that's also a big question. Which approach is better? I think also to keep in mind the fact that maybe the big difference between current senior generation and the next one is also that now we have much more people who are maybe, you know, in this sharing economy. Maybe we don't have that much our own asset, our own properties. Yes, the baby boomer generation is a little bit in a different position. Yes, we actually want to encourage those who have big houses or maybe big flats and they don't actually need the full space to release it for other needs. Yes, and maybe to move into senior living, co-living, or whatever. But what with the generations that are the future ones, and they actually stepped into the sharing economy model and they don't have their own properties?
Yeah, so I'm happy to pick that up. I mean, I think that the main thing in the sector is that I don't think you can have one model. I think you need to have choice for people, because everyone's situation is quite different. And if you're at a certain age where you're moving in, maybe at a younger age, perhaps buying is actually the right option for you. I know the US market has been majority for rent and has been since the kind of pre-2000s. in the UK and European markets, we've seen much more of a for sale led model. Though I think in recent years, we've definitely started to see the shift towards offering rental to residents, mainly because one, it gives them choice. And I think as we're seeing difficulties in the kind of macro wider residential space, it's difficult for people to sell their homes today at a price point that they think is probably where they should be selling their home. So if they need to buy into a community, most of them need to liquidate their home or sell their home in order to purchase. Whereas if you're renting, you don't necessarily have to do that right away. You can rent before you actually kind of sell your family home. So I think we have definitely seen emergence of the rental model. And I think also there's a lot of investment capital that would like to see more of a rental model. But I guess I stand by the fact that I think that there always needs to be choice for people, and renting in later life maybe isn't perfect for everyone. But I think especially as we're seeing the kind of age shift out into when people are moving into these, that you definitely are seeing an emergence of renters in the space, but it's getting the demographic, the elderly demographic, comfortable with that as well, because many of them have been very comfortable and lived their whole life owning a home. So getting them comfortable with renting is also a barrier, a cultural barrier that really needs to be overcome and explain to people why they might want to rent at a certain age or at a certain point in their life. So we're definitely seeing that emergence across the UK and Europe specifically, though I know it's dominated the US market historically as well.
Mm-hmm. But on the level of the facility itself, do you think it's more like that in one facility we have both options, or it's more like a completely different type of products for rental and for purchase?
We've seen a lot of people test that. So again, kind of offering both to offer that choice. My personal view is that I think it complicates the messaging. It complicates things when you have multiple tenures in one scheme, because one, it impacts potentially investor liquidity to exit, but also I think it confuses people. It offers sometimes too many choices to residents, and they already have so many choices to go through that if you have 4 different options to buy and 2 different options to rent and 5 care packages, like I imagine that is quite an overwhelming thing for somebody who's making such a big decision in their life. So I personally think that rightly or wrongly, that I think you kind of need to choose a business model and stick to that in each individual scheme, or at least in each block of apartments, say. But that may not be the way that things evolve. It depends, but that's my personal view on it.
Elizabeth, you are nodding your head, so maybe now up to you.
One of the things when I'm hearing people say who have for many, many years owned, but are reluctant, the big down payment and that large commitment when resources are really tight, are more open to a rental scenario than they might have been in the past. Because if you only have $60,000, $70,000, $80,000 saved and you're 64, and that's all the money, and we've got the workplace age discrimination, so you may not be able to get the kind of job that you've had in the past, that money becomes really precious. And you don't want to take $40,000 of it or $30,000 on a big down payment. So I think we will see more openness to a rental model. I do agree, though, this, which has been said many times here, this is a very diverse population with all kinds of needs, and we need the choice.
Yeah, I think choice is an interesting one, and it picks up. There was another quick question and comment that had come in from Greta, and actually also highlighted by Tibor, who's based out of Hungary as well, which is, of course, in Europe, Germany may have a rental model. Poland is very much an owner-occupier market. And so within Europe and within the countries here, we've got very different approaches to rental, to buyer markets. And I don't know if that is also true depending on the states in the US. And then how are you sensitive to that? Does that mean, everybody's got to, it's very difficult to then have a pan-European strategy in a way, because you've got to meet different markets in different ways. Caryn, do you want to just pick up on that in terms of the the viability of those and the matching what's, because you can have something where geographically they're not very far apart, but actually they're very far apart in terms of what their expectations are.
Yeah, and it's a very good point. I think that has consistently been a hurdle for kind of pan-European strategies in the space, because unlike the US, which is one country, I mean, it does have state-by-state regulations. I think the governments across Europe are quite different. The way that things are paid are different. The cultures are quite different, even though, like you say, kind of geographically you're touching boundaries. Culturally, they can be quite different. And so I think it is difficult from that perspective. I think the main driver is really what is the resident base and the culture in that particular location looking for. And that maybe doesn't always align with, say, an investor wants the rental model and says that they want kind of ongoing cash flow. They don't want to be in a for sale scenario. Then they would likely target the markets where rental is more dominant, which has been Germany, which has been France. We're seeing it evolve in the UK, but it varies depending on the investor. But I do think it creates, I guess, issues from a pan-European strategy, because if you have different payer models, that obviously creates questions, and then you have to kind of diligence each one of those markets quite separately. So the way that we've seen, I guess, investors tackle it across Europe is that they look at, here are kind of prime 3 markets, and maybe it's because of the population, maybe it's because of the model, the operational model, maybe it's because of the price point, because it's still evolving or maturing. It's for various reasons, but it has created a challenge 100% from a pan-European strategy, and doesn't make it easy necessarily.
And I'm conscious that we've only got around 10 minutes left, but it would be good just to get a perspective, Jennifer and Elizabeth, on that in terms of the different states, because obviously, the US is a huge area.
Right. Yes. Very diverse. So I think that, some of the most successful investors and senior living operators have recognized that there is a significant amount of due diligence and market research that goes into bringing a development to life, whatever that might look like in a market. And so I think a big misstep is assuming, right, that what you see in one market will happen in another market. And we see that while there's many trends and things that we can see consistently, throughout the United States, I've seen operators who primarily develop and operate in the Midwest attempt to bring a product into Washington, D.C., New York, New Jersey, which, might as well be a different planet in terms of, the people are different. They're all amazing and wonderful in their ways, but very diverse. So we find that we have to do a lot of good due diligence and really be clear on what it is you're offering and how it fits into that market.
No, I think that's interesting. And that picks up a little point actually in terms of, we mentioned a little bit what people are looking for, that it's aspirational. So what are the kind of things that people are looking for, or demanding, particularly for the sort of more active side of things? What is it that people are looking for?
One of the sort of new approaches that I've seen is a senior living facility. I think they're called Opus in Newton, Massachusetts, where one of the things you have to agree to coming in is that you will be engaged, that you will maybe it is you will be part of the gardening group, or you'll be, if there is a Saturday evening cocktail party once a month, that you will participate in organizing that, or if there's a seminar series. And this is a way that they have organized to try to bring costs down. And they are very actively targeting the forgotten middle, this market that is actually really demanding. You're talking about people who've done well most of their lives and are now facing this challenge. So it doesn't mean that they've changed their personalities now that there is some financial precarity. And I think there was some question, would people be willing to sign up where you have to say in advance that you are willing to contribute to creating and building this community. And they've had a lot of success with that. So what I'm interested in seeing are sort of new models that will not look like, when I say I'm not my grandmother, will not look like what we've seen before, and a willingness to test some of these, because we're not going to really know how successful they will be, unless we test them. This is, again, where I think there's a role for the government to play. It might be perceived as too risky for the private sector. But what we know is that what we've done in the past for this new demographic that has many different needs because of the longevity, that we need a lot more innovation in the space.
But I think also that maybe a role to play for the governments or the municipalities, because maybe it's more local level, is also the question of the plots for this type of investment. Yeah, because I think that maybe when looking ahead for this new generation of new adults, yes, older adults, maybe they will be more willing to move to another apartment, which is like, something, just to move to another facility. But if they stay in the same district, for example, yes, and we have it in many research that actually maybe it's much easier to move to another apartment, but if you'll be able still to go for a coffee to the same place where you've been going to for, last 30 years, and go to the same grocery store and so on. So is it also something that you're seeing as a trend, that actually, co-living is also connected to the good locations in the cities, in the areas, in the district where actually people are active and they would like to stay at?
What I'm hearing you say, sort of, if you can't age at home, can you age in community?
Mm-hmm. Okay, so I think that we have literally last 3 minutes, so maybe just catch up and summarize our discussion that could go, because I think that what is important, that we are still, everyone is redesigning this system. I think that the main maybe key message from this webinar, but actually something which is very much in line with other discussions, is that we shouldn't look back. Yeah, because of the new needs of the new generation, new context, actually even this naming and saying retirement communities, where we don't name people retired at 60 anymore, actually. So, if you think of the product about 60 plus and you are naming it retirement community, it's maybe not the proper name anymore, and so on and so on. So maybe if I could just ask each of you to have 1 minute summary of, how to move, what are the key factors that will drive this sector forward, what the investors or people in the, like developers, operators, should keep in mind if they want to be successful in this area. Jennifer, let's start with you.
Sure. I think that we have to be open to innovation and open to trying different things. And with that comes the very real access to capital. So that means, I think, the more, investors that we can draw to this space, the better, because there are a lot of amazing ideas out there that can be brought to life. I think that as we move forward, the impact of technology on affordability, on how we deliver care, how we deliver service, is going to truly change our space. And I think that with the changing demographic and people who are coming to us now, this is no longer a reactive approach to life and to healthcare. This is proactive. This is, how can I live a better life? How can I live a longer life? And how can I more of that focus on wellness. I think that if we continue to build our models around what is most important to the people who will be using them and living in them, you're headed in the right direction.
Mm-hmm. Caryn?
I would agree with all those things that Jennifer just said. I would probably also add, from kind of a UK and European context, is the addition of kind of or focus on quality operations. I think it's quite a key thing that historically, as the market has evolved, much of the community has been focused more on the kind of development angle. And I think there is to kind of Jennifer's point, a huge push towards wellness and longevity and keeping people alive longer. And the way you do that is by activating communities and the operating team that kind of sits within those. And that activation actually drives some of that longevity. And I think the second thing, which I alluded to previously, is around optionality. So there is no kind of one size fits all. Culturally, different markets are different, whether you're state by state in the US or country by country in Europe. But I think that there has to be a thought to that. Just because something has been done one way previously, that doesn't mean that going forward it has to be done that way. So it's being innovative in the way that we think about options for seniors as well.
Elizabeth?
So I think to think about longer lives and smaller nest eggs and what that means in terms of availability of affordable housing, what it means in terms of older Americans who are looking to be, how do they stay employable longer? So it may mean in a senior space, there is co-working, which I think typically would not be, because, if you're older in the past, you wouldn't be working. I think to also think about the solo aging. There's some 27 million older Americans who are aging alone, who either widowed, divorced, never married, or maybe even have adult children who are not in a position to help them. And then last, this forgotten middle. I was on a panel recently with where there was a National Council of Aging statistic that said 80% of older Americans are facing some kind of financial precarity. This is a big number. We sort of focus on the high end, and it's sort of like the tail wagging the dog. There's, this big unaddressed market that's in the middle.
Yeah, I think that's really interesting and a good point to close the session. But fascinating to get your views, Jennifer, Caryn, and Elizabeth. And also thank you, Sylvia, for co-moderating. Really interesting discussion. Thanks very much also to everybody for putting your views into the chat. I can see that there was quite an active session going on there, and also the questions that came in from that. We'll be running a series of these, and we'll announce those both on the Senior Housing and Healthcare Association website, but also at Real Asset Media, and look forward to really getting in depth on a number of these topics. But thanks very much for everybody for joining us, and thanks very much also if you are watching this on demand. Thanks very much, everybody.
Thank you. And of course, I encourage you to, like our profile on LinkedIn, because there you have all up-to-date information about what we are doing and what we are planning.
Thank you.
Thank you very much.